I gotta admit, sometimes I get tempted by those get-rich-quick schemes,
Well,
the ones that promise you'll be like sipping cocktails on the beach, next week, just by clicking a button. Thankfully, common sense usually kicks in, and I end up reaching for a good book instead. So today on Books to Riches, we are diving into 17 proven currency trading strategies to see if it can help us navigate the path to financial freedom. But of course, the usual disclaimer applies. Always seek professional advice before making any investment decisions. But before we get into the nitty-gritty, can you tell us, is there anything in this book for the average person looking for financial stability, not necessarily a Wall Street lifestyle?
absolutely. This book offers some valuable insights into understanding markets and managing risk, even mastering your own psychology,
Hmm.
which are all crucial for building wealth in any context. It's like a crash course in financial decision making disguised as a Forex trading guide.
It's interesting. So even if I don't plan on becoming like a currency trader, there's still wisdom to glean from this.
Definitely. But to appreciate those broader lessons, we need to understand the basics of Forex first. Can you explain what makes Forex trading different from, say, investing in stocks?
Well, I know Forex involves buying and selling currencies, but beyond that, it's a bit of a mystery to me. What's so special about it?
One key difference is the sheer scale of the market. We're talking about trillions of dollars being exchanged daily. Back in 2010, the daily volume exceeded $4 trillion, which dwarfs even the global equity markets.
$4 trillion. That's more than I can even fathom. Why is this market so massive?
It's because Forex is the backbone of global trade and finance. Every time a company conducts business internationally, currencies need to be exchanged. This constant flow of transactions makes the Forex market incredibly dynamic and liquid.
So it's not just some niche market for high-risk traders. It actually impacts all of us.
Precisely. The exchange rates we see at the bank or when we travel are directly influenced by this massive Forex market. But one thing that does attract traders specifically is the concept of leverage.
Ugh, leverage. That word always makes me a little nervous.
It can be a double-edged sword for sure. Think of it like a seesaw. A small push on one side can send the other flying high into the air. In Forex, leverage allows you to control a much larger amount of currency than your actual investment, amplifying both profits and losses.
So while the potential gains might seem enticing, the risks are equally magnified, right?
Exactly. The book illustrates this with a great example comparing two traders. One uses a high leverage of 100 to 1, meaning they control $100,000 for every $1,000 invested, while the other opts for a more conservative 10 to 1 leverage. Even a small market dip can wipe out a significant portion of the capital for the trader with higher leverage.
That's a stark reminder that leverage is a tool that demands caution and a deep understanding of the market.
Absolutely. And speaking of understanding the market, the book dives into the different types of Forex traders, or personalities as it calls them. There are scalpers who make rapid trades, day traders who close positions within the same day, swing traders who hold positions for a few days or weeks, position traders who focus on long-term trends, and mechanical traders who rely on automated systems.
Given that our listener is interested in steady gains and long-term financial stability, which of these trading styles would you say aligns best with those goals?
Day trading and swing trading would likely be the most suitable approaches for that type of investor. Both focus on identifying and capitalizing on short to medium-term market movements, allowing for more calculated risk-taking compared to the high-frequency world of scalping.
So it's not just about choosing a random strategy. It's about finding an approach that fits your individual goals and risk tolerance.
Exactly. And once you've established that, you can start exploring specific strategies that align with your chosen style. The book covers a wide range of strategies. But for our listeners seeking steady gains, I think we should focus on two specific examples. One for day trading and one for swing trading.
Sounds good to me. Let's get into those strategies and see how they can be applied to achieve long-term financial stability.
Before we delve into those strategies, I think it's important to highlight the 5 essential rules for trading success that the book emphasizes. These rules aren't just for Forex traders, they're applicable to anyone seeking to build wealth.
That sounds intriguing. I'm all ears.
The first rule is all about understanding your time frame. Are you looking for quick gains or long-term growth? This will determine the types of trades you make and the strategies you employ.
So it's about aligning your trading style with your overall financial goals, right?
Exactly. Just like a day trader focuses on short-term price fluctuations, someone aiming for long-term wealth might look at longer trends and hold their investments for a longer period.
That makes perfect sense. What's the second rule?
The second rule is about utilizing the right indicators. These are the tools that help you interpret market movements and make informed decisions.
I'm guessing this goes beyond just gut feelings or following the hype, right?
Absolutely. It's about having a system based on objective data and understanding how different indicators work to guide your decisions.
So it's like having a roadmap instead of just wandering aimlessly.
That's a great analogy. The third rule is about sticking to your plan. Once you've chosen a strategy and set your entry and exit points, it's crucial to execute your trades based on those rules, not on emotions or impulsive reactions.
So even if you get that feeling that the market is going to move in a certain direction, you have to trust the system you've put in place.
Discipline is a key factor in trading success. Emotions can lead to costly mistakes, especially when real money is at stake.
This is reminding me of how often we let emotions influence our financial decisions in everyday life. We might splurge on something we don't need, or make an impulsive investment based on fear or excitement.
It's the same principle at play. Emotions can cloud our judgment, whether we're trading currencies or managing our personal finances.
So what's the fourth rule?
The fourth rule emphasizes the importance of double-checking everything before executing a trade. Make sure your entry point, your stop-loss order to limit potential losses, and your profit target are all set correctly.
It's like the saying, measure twice, cut once. Taking that extra moment to verify everything can save you from costly errors.
Exactly. And the final rule, which I consider essential for any endeavor, is to keep a journal.
A journal for trading. What would that entail?
It's more than just recording your wins and losses. It's about analyzing your decisions, understanding your emotional patterns, and identifying your strengths and weaknesses as a trader.
So it's a tool for self-awareness and continuous improvement.
Precisely. By tracking your trades and reflecting on your thought processes, you can refine your strategies, manage your emotions effectively, and ultimately become a more disciplined and successful trader.
This reminds me of the importance of tracking our spending and budgeting in personal finance. It's about gaining clarity and control over our financial habits.
It's all connected. These principles of discipline planning and self-awareness are applicable to any area of life where we're seeking to achieve goals and improve our performance.
That's a powerful takeaway.
Yep.
Now, I'm eager to learn about those specific day trading and swing trading strategies you mentioned earlier. Can you give us a glimpse into how those approaches work?
Absolutely. For day traders, a strategy called fade the break stands out. Have you ever noticed how the market sometimes gets excited, pushes through a key price level, but then loses momentum and reverses course?
Yeah, it's like a sudden surge of enthusiasm followed by a collective realization that things might not be as great as they seem.
Exactly.
Yeah.
Fade the break is all about capitalizing on this phenomenon. Instead of jumping on that initial breakout, you wait for it to fail, and then enter a trade betting that the market will reverse.
I'm intrigued. Can you give us a concrete example of how this works in practice?
Let's say the AU-USD currency pair is attempting to break above a certain resistance level. On the price chart, it might look like the price is pushing through this level, but then the candle closes below the resistance line, signaling a false breakout.
So it's a bit like a bluff or a fake out in the market, right?
That's a great way to put it. And this is your signal to enter a trade, anticipating that the market will likely move downward.
So patience and the ability to read those market signals are crucial for this strategy. What about the swing trading approach? What strategy did you have in mind for our listener seeking steady gains?
One that I think aligns well with that goal is the trend rider strategy. This approach is all about identifying established trends and riding them, like catching a wave and surfing it.
So instead of trying to time quick reversals, you're looking for currencies that are already showing a clear direction and momentum.
Exactly. And the trend rider strategy relies on two key tools for identifying these trends: moving averages and the ADX indicator.
Can you break down those tools for us?
Moving averages are essentially lines on the price chart that smooth out price fluctuations over a specific period, helping you visualize the overall trend more clearly. It's like filtering out the noise and focusing on the bigger picture.
So it's about seeing the forest for the trees, right?
Precisely. The ABX indicator, on the other hand, measures the strength of that trend, telling you how much momentum is behind it.
So for swing trading, it's not just about identifying a trend. It's also about making sure that trend has enough power behind it to be worth riding.
Exactly. The book uses a great example with the GBP-USD pair, showing how the trend rider strategy waits for the price to break above a specific moving average, and for the ADX indicator to confirm a strong uptrend before entering the trade.
It sounds like patience and confirmation are key elements of this strategy. You're not rushing into any trade. You're waiting for the right setup to present itself.
That's one of the core principles of successful trading discipline. Whether you're a day trader or a swing trader, the ability to control your impulses and stick to your plan is paramount. And it goes even deeper than that. The book actually talks about using a trailing stop-loss order to lock in profits as the trend continues. So you're not just riding the wave hoping for the best, you're actively managing your risk and maximizing your gains along the way.
So it's like having a safety net that moves up with you as you climb higher on that wave, so you're protected from a sudden wipeout. This is reminding me of how important it is to adjust our financial plans as our circumstances change, whether it's increasing our retirement contributions as we earn more, or reassessing our investment portfolio as the market fluctuates.
Exactly. It's about being adaptable and proactive in our financial decision-making, not just setting a plan and forgetting about it.
You know, as we've been unpacking these Forex trading concepts, it's striking me how much of this wisdom applies to everyday money management.
It's true, isn't it? The discipline, the strategic planning, the risk assessment, these are all vital for building wealth regardless of whether you're trading currencies or managing your personal finances.
What if we took those 5 essential rules from the book and applied them to our personal finances? I'm curious to hear how that might play out.
Let's explore that. The first rule, know your time frame, translates beautifully to personal finance. It's about setting both short-term and long-term financial goals.
So just like a day trader focuses on short-term market moves, we might have short-term goals like saving for a vacation or paying off a credit card bill. Then there are those bigger long-term aspirations, like buying a home or planning for retirement.
Exactly. Each requires a different approach and mindset. The second rule, use the right indicators, could be likened to tracking your spending habits, analyzing your budget, or researching different investment options.
It's about gathering the necessary information to make informed financial decisions, much like a trader uses indicators to understand market trends.
Precisely. Now, executing trades based on the rules could mean sticking to a budget, resisting impulsive purchases, or having a well-defined investment strategy that you adhere to, even when emotions run high.
It's about having the discipline to follow through on your financial plan, even when faced with temptations or market fluctuations.
Discipline is key. And the fourth rule, double-check everything, translates to carefully reviewing bank statements, ensuring you're not being charged unnecessary fees, or seeking a second opinion before making a major financial commitment.
It's about being diligent and avoiding costly mistakes by being thorough in our financial dealings.
Absolutely. And finally, the trading journal becomes your personal finance journal, a place to track your progress, reflect on your spending habits, and celebrate your financial wins.
I love that idea. It's about turning our financial journey into a continuous learning experience.
By tracking and reflecting, we gain valuable insights into our financial behavior, which empowers us to make better decisions in the future.
This has been an eye-opening conversation. It's amazing how the principle of Forex trading, even if we never actually trade currencies, can provide a powerful framework for managing our personal finances and building long-term wealth.
The key takeaway is that financial success, regardless of the specific path you choose, hinges on a disciplined mindset, a strategic approach, and a commitment to continuous learning.
17 proven currency trading strategies has given us so much to think about, even if someone isn't interested in Forex trading. The lessons about risk management, discipline, and self-awareness are invaluable for anyone on their path to financial freedom.
It's true. This book goes beyond just trading strategies. It delves into the psychology of decision-making and the importance of having a system, which are applicable to any financial endeavor.
I think this episode has highlighted that financial literacy isn't just about understanding complex financial instruments, but also about cultivating the right mindset and habits.
And that's something anyone can develop. With the right knowledge and a willingness to learn.
So to our listeners out there, I encourage you to take these principles to heart, whether you're diving into the world of Forex trading or simply working towards greater financial stability in your everyday life.
Remember, the journey to financial freedom starts with a single step. Keep learning, keep growing, and keep striving towards your goals.
That's a fantastic note to end on. Thank you for joining us on this episode of Books to Riches, where we explore the wisdom hidden within the pages and how it can empower us to build a brighter financial future.
Until next time, keep those pages turning and those financial goals in sight. And it's not just about the financial side of things either. Think about the emotional discipline that traders have to develop to avoid making impulsive decisions based on fear or greed.
Yeah, it's a huge one. How often do we sabotage our own financial goals? because we let our emotions get the best of us.
It happens all the time. We might panic and sell our investments at the worst possible time, or we might get caught up in the hype and buy into something that's way overvalued.
It's like that saying, buy high, sell low, the exact opposite of what we should be doing.
Right. But successful traders have learned to master their emotions. They have a plan and they stick to it, no matter what the market throws at them.
That's a powerful lesson, and one that we can all apply to our lives. Whether it's resisting the urge to splurge on that fancy gadget, or holding on to our investments even when the market is volatile.
It's about having the discipline and the long-term vision to make sound financial decisions.
17 Proven Currency Trading Strategies might seem like a niche book, but it's packed with wisdom that's relevant to anyone who wants to take control of their financial destiny.
Absolutely. It's a reminder that financial success isn't just about luck. It's about having the right knowledge, the right mindset, and the willingness to put in the work.
And it's about learning from those who have already achieved success, like the traders featured in this book.
They've shared their insights, their strategies, their mistakes, so that we can learn from them and avoid making the same mistakes ourselves.
I think that's one of the greatest values of books in general. They allow us to tap into the collective wisdom of humanity.
It's like having a mentor in your pocket.
So to our listeners out there, I encourage you to keep exploring, keep learning, keep challenging yourselves, and don't be afraid to dive into topics that might seem intimidating at first.
You never know where you'll find that next nugget of wisdom that could change your financial life for the better.
That's a perfect way to wrap up this episode of Books to Riches. Thanks for joining us on this journey. And remember, the path to financial freedom is paved with knowledge. So keep those pages turning and those financial goals in sight.
See you next time.